Hello, I'm Finola Burke from Research as a Service, and I have with me Greg Bader, the CEO, and Jan Ferreira, the CFO and COO of rent.com.au. Thank you, Greg and Jan, for joining us.
Thanks for having us.
Now, you've delivered your fourth consecutive quarter of positive EBITDA, as well as record revenues for the core rent.com.au business. Could you talk us through what was behind the growth in the quarter just ended?
Yeah, look, we were lucky. We've had strong growth across both of our key, core revenue lines, so products and advertising. Particularly pleasing for me was this off the back of the March quarter, which is traditionally our strongest. So yeah, all our core metrics, if you like, have gone positive, which is fantastic. And when we break down on our products and our advertising in a little bit more detail, there's some hidden gems there as well.
Yeah, so Rent Bond is our one finance product, so it bridges the gap between a renter getting their bond back from their previous place and the new place. That's gone really well for us. This last quarter, we wrote almost $3 million of bond finance loans. Another one that I think is a little bit overlooked is our Rent Connect product through AGL. A few people probably realize, but we do just over 10% of all of AGL's net new customer additions through that product. And that's continued growing from strength to strength. As Greg mentioned, the advertising has also been going really well. For us, that's come off the back of 2 straight years of posting 20-something% growth in advertising, and we're well placed for the forward quarter as well, where we've got over 800,000 of revenue locked in for the coming year. And that's even though that's spread across the year, we're really pleased with that.
And your recently launched RentPay platform ended the quarter with 700 paying customers, and you have the opportunity to add another 1,500 in this quarter. Is the rollout tracking to your expectations?
Simply, yeah. We're yet to start marketing on the product, so to have 700 come through, I mean, let's be honest here, we're talking a product that's been in the market for less than 90 days with no marketing support. So we're pretty happy with that. Obviously, we have big ambitions with the product. We think it is going to be the way that people pay rent. We need to get our marketing sorted. We're in the process of planning for a pretty extensive campaign, and between now and then, we're starting to activate other content and whatnot. One of the interesting things about RentPay is that we're actually creating a new product and a new segment. So a lot of our marketing, you'll see it start to steer towards educational. So testimonials from existing customers and whatnot. And that's something we need to explain better. I mean, just to call out two products. One of them is our buffer. So when we initially surveyed our base over a year ago now, 40% of people indicated they would be interested in the buffer. So even ignoring the COVID context, just if we look at our customer base, which is dominated by under 40-year-olds, casualisation of the workforce, the ability to be able to put a little bit more money aside each week or each fortnight and build up that buffer to cover yourself if you're in an event where you're not earning income. And that can be as simple as going on holidays for a couple of weeks. So we think that's really important. People like it. I forget the actual numbers, Jan. How many in our quarterly were?
So we've done about a third of people create a buffer.
Yeah. So that's really interesting. That's obviously going to grow as we go forward, but it's one of those features that you kind of need to explain it in a little bit more detail than a simple ad. The other one I think that we really need to go hard on is our score builder product. Now this is once again based on customers. We recognise that the vast majority of renters are doing the right thing. They're paying their rent. They're great tenants, but there's no recognition for that. So the score builder is a way of someone's rent contributing, if you like, overall to increasing their credit score over time. So we look at it as someone that rents for 3 or 5 years, they may move into a personal loan or a mortgage. Their financial standing will be better off for the fact that they've been paying rent through RentPay. So if you like, you're putting your rent to work. So rent money is no longer dead money. So, all those things considered, we're happy where we are. We've obviously got ludicrous targets. We do think this will be the default. We're talking to a lot of people in the market. We mentioned in our quarterly the migration coming up. So The feedback from real estate agents has been positive. We've done time and motion studies with real estate agents. We know that something that takes hours now can take minutes. And I guess, interestingly, there's a couple of other side benefits there where a real estate agency prefers simple and easy. So at the moment, they have tenants asking to pay weekly, fortnightly, and the agents tend to try and steer everybody into the same. If an agency could have everybody paying on the 10th of the month, then they would do that. So RentPay allows that. It allows that agency to operate at maximum efficiency, but still offer full flexibility out to the consumer side. And then, smaller things like NPP, instant payments, removes a bit of angst in the process. So, yeah, we're happy where it is. We've already indicated to market that we've got pretty lofty ambitions, and you'll see us, head down, bum up. That's where our focus is going forward.
Now, and you mentioned earlier that you booked $800,000 in advertising already. Can you elaborate on your outlook for this quarter and the remainder of the calendar year?
Yeah, look, as I mentioned, that's something that we've been working on really hard, is the advertising. A lot of the industry is going towards just placing eyeballs in front of people in sort of the most efficient manner possible, and accepting sort of lower rates to do that because it's very efficient. For us, we've actually made a point of difference for ourselves by really working with advertisers to deliver value back to them. So it's not just about eyeballs, it's actually about what are the results the advertisers are getting. And that's helped advertisers book longer term contracts with us. So it's not just about a 4-week campaign. We've got some that are even paying up to 12 months. So that creates a lot of steadiness for us. So through this financial year, we're expecting more than 20% growth again for the 3rd year running out of that advertising segment. The fact that we've got that 60% of last year's revenue locked in contractually just allows us to focus on building that more. So for this quarter, we'd expect to see advertising increase again. In terms of the other products, they're all we've got off to a pretty good start. Obviously, with lockdowns around the country, that does slow down the rate at which people move house, and we have seen a little bit of that impact. But there are other products, so advertising insulates us against some of that, but also some of our other products that help renters stand out, such as our rent check, for example, are really valuable at this point in time for renters because it's a tight market when they can actually move. So we're pretty positive about how we're going. From a RentPay perspective, we're focusing on the migration. We mentioned in our quarterly that we expect to get about 1,500 additional renters using RentPay through that migration. But as Greg's just mentioned, that also allows us, there's 40 agencies that use that product. It allows us to work with them to bring in the features that agents are looking for, so we can still have a rent-to-let product, but that also suits agents going forward. So busy quarter ahead for us.
Mm-hmm. And what about the wider move? We saw the APT news today. Is rent.com.au on the radar for anybody?
Yeah, so I haven't read all the detail on the Afterpay, but certainly the numbers are eye-watering. So it's funny, if we just look in the Australian context, prop tech or real estate and fintech and the overlap there is a lot of change happening in the industry. Each week we see new arrivals, and each week, unfortunately, we also see people depart. It is a tough industry. It's probably not a normal market in the sense that we have a couple of really dominant players. So then we have a lot of tier 2 and around that area. So I would expect some consolidation and partnership type models to come through. We're starting to see interest in our business. How do I put this properly? We're starting to see, I guess, what we believe in our business. We're starting to see other people see that as well. And, that's backed up by the work we're doing with AGL. I mean, pulling in 10% of AGL's net adds from 0 a year ago is crazy. The support we're getting from our advertisers, and they're not doing it because they love us, they're doing it because we generate them leads. So we're starting to get that broader recognition of where Rent fits in. We're, highest rated app, and we're in, the top few portals in the country. So yeah, we've had some chats. We're having other chats. I think there's RentPay's certainly sparked a bit of interest. There are a lot of synergies and adjacencies where rent pay can move to. You know, we love the build to rent industry. I think that's starting to come into its own in Australia, and there's been a few variations of that pop up in the last month. And then obviously into the commercial space, we have lease.com.au. So look, we're open to those sort of things. We have a technology roadmap in front of us that's pretty full for both rent and for rent pay. And, you know, we're open to the idea of acquisition or partnership in terms of achieving those capabilities rather than just the default of build it ourselves. It allows us to move faster in some instances and obviously scale and expand our footprint. So it's an interesting space. I think there's going to be more moves over the next 6 to 12, and you know, we're chatting to the right people for sure.
Well, it sounds like you're going to have a very interesting and busy 6 months ahead. Thank you, Greg Bader and Jan Ferreira, for joining us today.
Thank you.
Thanks,
Cheers.
Finola.